the top finance stories of today. As per a story in Markets Insider, a glitch on the New York Stock Exchange caused prices of some blue-chip stocks such as Morgan Stanley and Wells Fargo to swing wildly on Tuesday, causing chaos in the markets. Over 250 stocks were affected by the system glitch, causing large price swings shortly after the 9:30 a.m. New York Open. While stocks such as Walmart saw a 12% jump, Morgan Stanley fell nearly 13% and Wells Fargo plunged 15%. Trading in affected stocks was halted almost immediately and reopened within 15 minutes. The NYSE attributed the price swings to a system issue and explained that it resulted in the NYSE not conducting opening auctions, causing stocks to start trading at unusually high or low prices. The NYSE said it was canceling the unusual trades and is thoroughly examining the day's activity. The U.S. Securities and Exchange Commission is also looking into the episode. The NYSE ended the day with a normal market close and expects a regular open on Wednesday. Shares of the Intercontinental Exchange, which owns the NYSE, closed 2.22% lower on Tuesday. As per a story of Reuters, shares of Adani Enterprises in India faced a sharp drop of 20% on Friday after a report by U.S. short seller Hindenburg Research raised concerns about the company's debt levels and use of tax havens. The report triggered a sell-off in the conglomerate's 7 listed companies, causing a combined loss of $48 billion in market capitalization and a drop in U.S. bonds of Adani firms. This has cast doubts on the company's secondary sale worth $2.45 billion and its subscription levels, especially with retail participation. J.P. Morgan expressed concern about the underlying credit profiles of group companies and the impact on banks due to their exposure to the group's debt. Neeraj Dewan from Quantum Securities described the sell-off as a classic case of panic selling that is impacting the banking sector and added that at least 40% of the group's debt is exposed to Indian banks, which is causing worry among investors. Despite the sell-off, Seema Shah, chief strategist at Principal Global Investors, London, believes there is no systemic risk and that the medium-term impact will be driven by the company's response to the allegations and its fundamentals. As per Reuters news article, Intel Corp saw a decline of around $8 billion in its market value on Friday after it announced poor earnings projections that surprised Wall Street and sparked fears of a slump in the personal computer market. The company predicts a loss for Q1 and its revenue forecast was $3 billion lower than expectations, due to slowing growth in the data center business. Intel's decline overshadowed rival Advanced Micro Devices, AMD, and Nvidia, which both ended the session higher. Intel is facing challenges under CEO Pat Gelsinger as he tries to re-establish the company's dominance in the sector by expanding contract manufacturing and building new factories in the US and Europe. The company has been losing market share to rivals like AMD, who have used contract chipmakers to produce technology that outpaces Intel's. Intel plans to cut $3 billion in costs this year, but with capital expenditure estimated to be around $20 billion in 2023, analysts suggest the company should consider cutting its dividend.